All right, let's get started. I want you to forget just about every theory you learned in university, because in this firm, we operate on one and only one fundamental reality.
You see, every single price tick, every financial report, heck, every satellite image, it's all just a pixel in this massive mosaic we're trying to predict. Your success here isn't going to be about your fancy degree. It's about your ability to master this one single reality. The market is data.
So, the first and most important warning I can give you is this: garbage in, gospel out. Now, what does that mean? It means that in a quant system, a bad data point isn't just some small mistake. No, it's poison. It contaminates every single model that comes after it. Our optimization engines, they don't know the difference. They'll treat that garbage input with the same reverence as a perfect signal. And that leads to what we call optimally wrong decisions. This is why your job, right from day one, carries immense responsibility.
Everything you do here, it's going to be governed by 3 golden rules. You need to burn these into your brain. Number 1, question every single data point. Every single one. Number 2, understand the history locked inside that data. And number 3, respect the laws of data, and I mean both the legal laws and the logical ones.
Okay, so here's our game plan for today. It's pretty straightforward. First, we'll map out the entire data universe. Then, we'll walk through what I call the crucible, the purification process. After that, you'll see how that clean data fuels our investment engine. And finally, we'll navigate the legal maze that sets our boundaries. Let's get into it.
All right, section 1, the data universe. Let's dive right in. The first step is mapping out the raw materials for our entire process. I want you to think of yourselves as prospectors, okay? And this is your map to where the gold is buried in the modern market.
So this landscape, it's really divided into 2 big continents. You've got your traditional data, price and fundamentals. That's the bedrock. It's structured, it comes in slow, and it basically tells you what happened. Then you have alternative data. That's the new frontier. It's messy, it's real-time, and it gives you a peek into what's happening right now.
Now, to really get your head around this new frontier, we use a framework called the 4 V's. You've got volume. We're talking massive scale. Velocity. It's coming at you at lightning speed. Variety. It's everything from text and images to video. But the one I want you to really focus on is the 4th V, veracity, truthfulness. This data is often messy, less accurate. Now, for most people, that's a huge problem. For us, that's where the opportunity is.
Take a look at this spectrum. The real takeaway here isn't just that there are different types of data. It's the massive shift in frequency. Think about it. We're going from quarterly reports, which is like driving while only looking in the rearview mirror, to real-time signals like web sentiment or foot traffic that tell us what's happening on the road ahead, right now. Every one of these is a different lens on reality. Our job is to fuse all those views into one clear, coherent picture. Okay, section 2. Now, just collecting all this data, that's the easy part. The raw stuff is almost always dirty, it's biased, and it can be incredibly misleading. So this next part is about the crucible. It's the critical, absolutely non-negotiable process of forging that raw material into something we can actually trust, an institutional-grade asset. And here's a perfect example of why understanding history is so critical. Look at the A-share market. Before 2005, 2/3 of the market just couldn't be traded. The split share structure reform in 2005 wasn't just some minor rule change, it created a fundamentally different market. So if you build a model that just stitches pre- and post-2005 data together without understanding this, you're modeling a market that literally doesn't exist anymore. It's not just useless, it's dangerously deceptive.
This brings me to the first cardinal sin of quant analysis: survivorship bias. It's simple, really. If your backtest only includes the companies that are in the S&P 500 times today, you've conveniently forgotten about all the ones that went bankrupt or got delisted along the way. You end up studying only the winners, and that creates a dangerously rosy, completely false picture of how a strategy actually performs.
The second sin, look-ahead bias, is even trickier. It's more insidious. It's when you accidentally use information in your backtest that you couldn't possibly have known at the time. A classic example? Using a company's full-year earnings data in a test for December, when that data isn't actually released until late January. You're basically giving your model a crystal ball. This kind of bias can make a totally worthless strategy look like the Holy Grail. So, rule of thumb, if a backtest looks too good to be true, this is the first thing you hunt for.
And the A-share market has its own set of traps that demand very precise solutions. For example, a stock hitting its price limit isn't just an outlier you can smooth away. No, it's a liquidity cliff, and it has to be flagged in our risk models.
Or a suspended stock. That's not a missing value you just ignore. It's an illiquid asset, and its value has to be updated every single day using the index return method. Let me be clear. These aren't suggestions. These are our operational requirements. Period.
Okay, Section 3. So once we have this purified data, what happens to it? It becomes the high-octane fuel for our entire investment engine. And I mean every component, from the alpha models that find opportunities, to the risk models that protect us, to the cost models that help us execute. Everything runs on the same single source of truth.
Now here's a really crucial point. The meaning of data is completely dictated by the market structure. Take the momentum factor. In the US, it works pretty well. But in China's A-share market, which is driven by retail behavior, it's a dog. It performs terribly. What does work there? The short-term reversal factor. It's incredibly strong because it systematically profits from that retail overreaction. You see? The data is the same, just price history, but its predictive power is completely flipped on its head.
I want you to think of our whole process as an integrated data refinery. The alpha model takes the clean data and turns it into predictive signals. The risk model uses that same exact data to build the covariance matrix, which is basically a map of how all the assets move together. And the cost model uses our high-frequency data to predict the market impact of every trade we make. It's one source of refined data powering every single decision. And trust me, this isn't just some academic theory. This is an arms race. Just look at our top competitors in China. These guys aren't running simple little models. Mingxi has evolved to machine learning. Highflyer is using AI to actually put a price on retail sentiment. Jukun is building its own supply chain graphs from text data. The edge today isn't just having the data. It's in the sophistication of how you process it.
All right, that brings us to our final section. And honestly, this might be the most important one. Here's how we think about compliance. It is not a constraint. We see it as a competitive advantage. Why? Because when you master the rules of the game, you can play in parts of the market that your competitors are too scared or too sloppy to touch.
Let's be crystal clear on this. Material non-public information, or MNPI. This is the absolute red line. Trading on it is a crime. Full stop. Now, old-school insider trading is usually pretty obvious. But alternative data? That's where you find all sorts of gray areas. And learning to navigate that ambiguity the right way is absolutely paramount.
And if anyone here doubts how serious this is, just look at the App Annie case. The SEC came down on them like a ton of bricks. They charged them with fraud because they were taking confidential app data, telling clients it would be anonymous, and then turning around and selling it as an investment product. That case sent a massive shockwave through the entire industry and basically set the new standard for how regulators look at this stuff.
Because of that, our due diligence process for any new data source is absolutely non-negotiable. We have a checklist. Where did this data come from originally? How was it collected? Does the vendor actually have the legal right to sell it to us for making investment decisions? Is it compliant with all the privacy laws? And what are their internal controls to make sure it's not contaminated with MNPI? If we get a vague answer to even one of these questions, the conversation is over. They are immediately disqualified.
And in China, the rules are even more specific and strict. You have the Personal Information Protection Law, PIPL, which is one of the toughest in the world. And the new programmatic trading rules require a report first, then trade approach. Again, these aren't just guidelines on a piece of paper. They are hard-coded directly into our trading systems.
So what does this all mean for you? It means you are not here to just be a passive consumer of data. Your job is to be a guardian of the data. You are our first and our most important line of defense against that garbage in, gospel out poison. You are personally responsible for the integrity, the legality, and the ethical use of this firm's single most vital asset.
So I'll leave you with a thought experiment. Picture this. You find the new data set. The backtest is incredible, a sharp ratio of 4. Your PM is thrilled, already thinking about the bonus. But when you press the vendor on where the data really comes from, they get vague, they dodge the question. So, what do? Your answer to that question, right there, will define the kind of analyst you become. Because let me tell you, an alpha built on legal or ethical quicksand, that is an alpha. It's a liability waiting to explode. This foundation is what you will build your entire career on. The market is data. All right? Let's get to work.